All right, buckle up, everyone. We're diving deep into Persistent Systems today.
Deep dive.
You sent us their Q2 FY25 earnings report.
Yeah.
And let me tell you, this company, they're making some serious moves.
Oh, they are.
They're a global player in tech,
Mm-hmm.
working across industries, geographies. I mean, we're talking software, healthcare, financial services.
Active everywhere.
They're everywhere.
It's true.
What's fascinating to me right off the bat is their growth.
Oh, yeah.
It's not just a one-time spike.
Right.
They've reported growth for 18 consecutive quarters.
18.
This quarter alone saw an 18.4% year-over-year jump in revenue, reaching a cool $345.5 million.
It's impressive.
18 quarters in a row.
Mm-hmm.
That's not just luck. That's a trend.
Definitely a trend.
So what's driving this impressive top-line performance?
Well, I think they're, this whole AI-led, platform-driven strategy.
Right.
It's a big factor.
They're all in on AI.
They are.
It seems like they're really positioning themselves as the partner. For businesses that are looking to harness the power of AI for digital engineering and modernization.
Totally.
And it looks like the market is responding.
For sure. The market is responding.
And they're not just talking the talk either.
No.
They're backing it up with some strategic acquisitions.
Right.
Like Arca.
Mm-hmm. For digital governance.
For digital governance, and Starfish Associates for AI-powered contact centers.
Yeah, they're putting their money where their mouth is.
They are.
Absolutely.
But hold on, because it gets even better.
Oh, does it?
Not only are they growing, but they're doing it profitably.
Oh, wow.
Their EBIT and PAT margins are both strong and increasing.
That's fantastic.
Okay, now before we get too deep in the financial weeds here, can you break that down for us? What does that mean for someone who, maybe isn't a financial expert?
Not everyone's following these acronyms. So essentially, it means they're not just making money, but they're making it efficiently.
Gotcha.
EBIT, or earnings before interest and taxes, shows us the profit from their core operations.
Okay.
And PAT, or profit after tax, tells us how much profit they keep after paying taxes.
So strong and growing margins are excellent signs of financial health.
Absolutely.
So financially, it seems like they're in a good spot.
Yeah, they are.
But with this ambitious growth strategy, how are their expenses looking?
Good question.
Are they managing those effectively?
Well, that's the key question.
Right.
The report shows their total direct costs have increased year over year.
Okay.
Which is expected.
Right, with revenue growth.
Exactly. But here's the kicker.
Okay.
Their gross profit jumped by a significant 21.1%.
Wow.
That tells us they're managing those direct costs effectively.
Okay, so they're making more money and the costs are under control.
Exactly.
But what about the actual profit they're taking home?
Yeah.
Let's talk about operating income and operating margins.
Okay, so operating income, or EBIT, is a measure of a company's profit from its core operations, excluding interest and taxes.
Gotcha.
Persistent's operating income saw a healthy increase, up 22.8% year over year.
So their core business is making more money.
Yes.
What about the operating margin?
Okay.
What story does that tell?
Well, the operating margin, this is a fantastic indicator of profitability.
Okay.
It tells us how much profit they make for every dollar of revenue generated from operations.
So like efficiency?
Yeah, basically, in simple terms, a higher operating margin usually points to better cost control and efficiency.
So what's the verdict on Persistent's operating margin?
Drumroll, please.
Aha.
It's good news.
Give us the good news.
It's good news indeed. Their operating margin is holding steady at a solid 14%.
All right.
Which means for every $100 of revenue, they're keeping $14 as operating profit.
Wow. Okay, so we've got healthy growth, strong margins, expenses under control. Sounds like Persistent is firing on all cylinders.
They're doing well.
But let's talk about the bottom line.
Okay.
The net income.
Yeah.
How did they perform there?
All right, so net income, also known as PAT, profit after tax. This is the ultimate measure of a company's profitability.
Right.
It's what's left over after all expenses, including taxes, are paid.
Gotcha.
And Persistent delivered a fantastic performance here as well.
Really?
Their net income jumped a remarkable 23.4% year over year.
Wow, that's a significant leap.
Reaching $3,250 million.
So they're clearly generating profit, but can they keep this momentum going?
Yeah, that's the question.
What does their cash flow look like?
Okay, so cash flow, this is like the lifeblood of any business.
Right.
It shows their ability to generate cash from operations to fund growth, pay dividends, and invest in future opportunities.
So is Persistent's cash flow keeping pace
Good question.
with its impressive revenue and profit growth?
Yeah.
What's the report telling us?
Well, the report, it doesn't give us like a super detailed breakdown of their cash flow statement,
Okay.
but we can still get some insights,
Yeah.
Their strong and growing profitability
Mm-hmm.
combined with good management of working capital. We see that reflected in a stable DSO.
Right.
Suggests they're generating healthy cash flow from their operations.
Okay, that's reassuring.
Yeah,
Now, let's talk about debt.
sure.
Are they using debt strategically to fuel expansion?
Mm-hmm.
Or is it something we should be concerned about?
That's a crucial question.
Right.
And the answer is in their balance sheet.
Okay.
Their debt levels seem manageable.
Okay.
They have a good mix of debt and equity, which suggests a balanced approach to financing their growth.
Gotcha.
It's not setting off any alarm bells for me.
Excellent. Now, companies often give us a glimpse into their expectations for the future.
Right.
Any predictions or targets from Persistent for the next quarter or year?
It's interesting. They didn't give us specific financial targets.
Oh, okay.
However, they did emphasize their continued commitment to their AI-led, platform-driven strategy.
Right.
And highlighted investments in key growth areas.
Right.
Like AI, digital governance, and cloud services.
Yeah.
This tells me, they're optimistic about their future, but also cautious about making precise predictions.
Right.
In a dynamic market.
Makes sense.
Yeah.
So we'll be watching their next earnings report closely.
Absolutely.
See how those projections play out.
For sure.
Now, beyond just the numbers, how does Persistent stack up against the competition?
Okay.
Are they leading the pack? Are they playing catch-up?
Well, Persistent positions themselves as a leader in several niche areas, particularly in software product engineering and the Google Cloud ecosystem.
Gotcha.
Their report highlights their deep expertise and showcases partnerships with industry giants like Google, Microsoft, and Amazon.
Plus, they've received some pretty impressive recognition from industry analysts.
Oh, yeah, absolutely. They were named a challenger.
Wow.
In the Gartner Magic Quadrant.
Okay.
For public cloud IT transformation services.
That's a big deal.
For the second year in a row. That's a big deal.
Yeah.
And they were also recognized as a leader in ISG Provider Lens for Google Cloud Ecosystem Partners.
Wow.
These accolades definitely back up their claims of being a major player in these specific markets.
So they're walking the walk and talking the talk.
They are.
But what about their market share specifically?
Okay.
How do they measure up against their rivals?
That's where things get a little tricky.
Oh, how so?
The report doesn't give us exact figures on their market share.
Okay.
However, they do mention working with a significant number of Fortune 500 companies, including some big names in healthcare and technology.
Okay, so they're playing in the big leagues.
They are.
But without hard numbers, it's tough to gauge their exact market share.
It is. We need to look at this in context to get the complete picture of their competitive position. We need to dig into market research reports, competitor analysis, and other industry data.
Okay, so we've covered a lot of ground here.
We have.
Persistent's impressive financials, their dedication to innovation and growth, and their position as a leader in some key market segments.
Exactly.
To wrap things up, let's talk about some key ratios that give us a snapshot of their overall financial health and efficiency.
Okay.
What are some of the key takeaways?
Great point. Ratios can give us valuable insights that go beyond the raw numbers.
Right.
First up, their return on equity, or ROE, is sitting at a healthy 24.7%.
Okay, break that one down for us.
Sure. So that means that for every $100 of shareholder equity, they generated $24.70 in profit. That's a sign of strong profitability and efficient use of shareholder funds, investors. They love to see a healthy ROE.
Yeah, impressive. What other ratios are worth noting?
Well, their days sales outstanding.
Okay.
Or DSO, which measures how quickly they collect payments from their clients, is around 68 days.
Okay.
This indicates a healthy cash conversion cycle.
So that means they're getting paid on time.
Pretty much, yeah. They're not having to wait too long to collect their receivables, which is good for their cash flow.
So they're profitable, efficient, and financially sound.
They are.
What does this all mean for someone considering an investment in persistent systems?
Well, it definitely paints a positive picture.
Yeah.
They're a high-growth company with a strong track record of profitability,
Right?
a solid financial position,
Yeah,
and a clear strategy for the future.
seems like it.
And they're attracting attention from industry analysts
Right.
and receiving accolades for their expertise
Mm-hmm.
in key growth areas like AI and cloud services.
But as with any investment, there are always risks to consider.
That's true.
Right.
Absolutely. It's important to note that Persistent operates in a highly competitive and rapidly evolving industry.
Right.
The technology landscape is constantly shifting.
Yeah.
They'll need to stay agile
Right.
and adapt to new trends and challenges to maintain their competitive edge.
So they can't just rest on their laurels.
No, not at all.
Okay.
And, their reliance on a relatively small number of large clients also poses a potential risk.
Right.
If any of these key clients were to reduce their spending or switch providers, it could significantly impact Persistent's revenue.
That's a good point.
Yeah.
It's always essential to consider
Right.
the potential downsides along with the positives.
Sure.
Any of the red flags or areas to watch closely?
Well, their recent acquisitions, while strategically sound, could also present integration challenges.
Right.
Successfully absorbing and leveraging the expertise and technology of these acquired companies will be crucial for Persistent's long-term success.
Integration's always tricky.
It is.
Yeah, so a lot to be optimistic about. But investors should also proceed with caution
Right.
and do their own due diligence.
Absolutely.
It sounds like Persistent is on a roll.
They are.
But they'll need to navigate some potential bumps in the road
For sure.
to sustain their momentum.
It'll be interesting to watch how they execute their strategy and address these challenges in the coming quarters.
Well, this has been a fascinating deep dive.
It has.
It's clear that Persistent Systems is a company that's doing a lot of things right. They're growing rapidly, managing their finances well, and carving out a leadership position
Absolutely.
in some exciting areas of the tech industry. But as with any investment, it's crucial to weigh the potential risks and rewards carefully.
I completely agree. There's a lot to like about Persistent's story. But investors should approach it with a healthy dose of skepticism and do their own research to make informed decisions.
One final thought for you to ponder.
Okay.
Persistent emphasizes a boutique experience for its clients,
Right.
focusing on high-touch service and customized solutions as they continue to grow and expand their client base.
Yeah.
How sustainable is this approach?
That's a great question.
Can they maintain both high growth
Right.
and this high level of personalized attention?
Something to think about.
Yeah, something to think about as you follow Persistent's journey.
Absolutely.
And as always, if you have any questions or want to dive deeper into any of these topics, feel free to reach out to us.
We're here to help.
We're here to help you navigate the complex world of financial reports.